Hey everyone, welcome back to CryptoScope, your go-to channel for everything crypto. Today we're diving into a topic that affects every trader, every investor, and every person watching the market closely: fear and greed. Not just as words you see on the headlines, but as forces that shape prices, influence decisions, and sometimes determine whether your next move is a win or a loss. Understanding market sentiment is one of the most important skills you can develop in crypto. It's invisible, but it's real. It's the reason markets spike when nothing has fundamentally changed, and why they crash when the news seems harmless. Fear and greed are emotional triggers, and if you can recognize them, you can anticipate market swings rather than react to them. Let's start with fear. Fear is primal. It's wired into us to protect against danger. In the context of crypto, fear shows up when prices drop, when uncertainty dominates headlines, and when the market seems unpredictable. Investors panic, sell off their holdings, and often make decisions based on emotion rather than logic. This is the kind of fear that can push a coin down 20, 30% or more in a single day. But here's the thing, that same fear often creates opportunity. When fear is at its peak, prices are often lower than their true value. Investors sell because they are scared of losses, not because fundamentals have changed. This is where you, as a smart trader or investor, can step in. History has proven that buying during moments of extreme fear often leads to significant gains once sentiment stabilizes. Of course, this requires patience, research, and a willingness to go against the crowd. Now, greed is the flip side. Greed appears when the market is rising, when investors feel unstoppable, and when FOMO, the fear of missing out, takes over. In moments of greed, people buy without analyzing the market, often entering at peaks because they see everyone else making money. Greed can push prices far beyond reasonable valuations and is often followed by sharp corrections. Recognizing greed is just as important as recognizing fear. When the market is euphoric, it's often time to be cautious or even consider taking profits. Crypto is particularly sensitive to fear and greed because of its volatility. Traditional markets can be swayed by sentiment, but crypto magnifies these emotions due to its smaller market size, rapid news cycles, and the online nature of its community. Social media, news outlets, and even forums like Reddit can drive massive swings in price based on hype alone. Take, for example, the concept of market sentiment indexes. Tools like the Crypto Fear and Greed Index measure the emotions driving the market. It analyzes volatility, volume, social media activity, surveys, and trends to produce a number representing fear or greed. Extreme fear can indicate a buying opportunity, while extreme greed can suggest caution. These indexes aren't perfect, but they give a snapshot of collective emotion, which is invaluable in a market driven by psychology. Right now, looking at recent trends, sentiment is fluctuating in a way that suggests the market is at a tipping point. Investors are torn between optimism and caution. News headlines about regulatory changes, institutional investments, and new projects are creating waves of excitement and worry almost simultaneously. This is exactly why understanding sentiment is more critical than ever. Fear and greed don't act in isolation. They're amplified by herd mentality. Humans naturally follow the crowd. When everyone is buying, the fear of missing out can make even rational investors throw caution aside. When everyone is selling, fear feeds on itself, creating panic that can push prices lower than fundamentals justify. Recognizing these patterns allows you to step back and make decisions that are strategically rational, even when everyone else is acting emotionally. Let's talk about how this plays out in a real scenario. Imagine a coin that has been steadily increasing. Suddenly, news breaks about a potential regulatory hurdle. Prices drop, panic spreads on social media, and fear dominates. Many investors sell immediately. If you understand sentiment, you might see this as a temporary overreaction, a buying opportunity while the market is in extreme fear. Conversely, if a coin is skyrocketing and social media is flooded with hype, greed is dominating, and a correction is likely. Now here's where you come in. You can't control the market, but you can control your reactions. By recognizing fear and greed, you can avoid the common traps: panic selling and FOMO buying. You can instead position yourself strategically, entering when sentiment is irrationally negative and taking profits when sentiment is irrationally positive. This doesn't guarantee profits, but it significantly improves your odds. And speaking of positioning, let me take a moment to encourage you. If you're enjoying this insight and want more strategies to navigate the crypto market, make sure to hit that subscribe button. Here at CryptoScope, we break down the market, the psychology, and the trends. So you're not just following the hype, you're making informed decisions. Let's go deeper. Fear and greed also interact with market cycles. In every cycle, there are phases of accumulation, uptrend, euphoria, correction, and sometimes panic. Understanding which phase the market is in can help you interpret sentiment correctly. For example, during accumulation, sentiment might still be cautious, but the smart money is quietly buying. During euphoria, sentiment is overwhelmingly greedy, and the risk of a sudden correction is high. Timing is everything. Crypto markets are faster than ever. News spreads instantly, sentiment shifts in hours, and trades happen at the speed of light. That's why recognizing the signs of fear and greed early can make a huge difference. Traders who identify extreme fear early can buy before the market turns, and those who recognize extreme greed can lock in gains before a downturn. Now, some people say sentiment is too unpredictable, but the truth is, while you can't predict the market perfectly, you can anticipate human behavior. Market cycles and sentiment patterns repeat themselves. Greed leads to bubbles, fear leads to opportunities. Understanding this pattern allows you to think strategically rather than emotionally. And here's a subtle point. Your own emotions matter too. Fear and greed don't just affect the market, they affect you. It's easy to get caught up in hype or panic and make impulsive trades. That's why self-awareness is just as important as market awareness. A disciplined trader recognizes their emotional state and makes decisions based on analysis, not reaction. Let's make it practical. Suppose you're analyzing a coin with strong fundamentals. The price dips sharply due to negative sentiment, even though nothing has fundamentally changed. A fear-driven investor might panic sell. A sentiment-aware investor might see this as a strategic entry point. On the other hand, if a coin with weaker fundamentals is surging, a greed-driven investor might jump in, while a disciplined trader may wait for a correction or avoid the trade entirely. Social media plays a huge role in amplifying fear and greed. Twitter, Telegram, Reddit, and TikTok can create massive hype or panic in minutes. Influencers, news reports, or even a single viral post can shift sentiment drastically. That's why it's crucial to step back, analyze the fundamentals, and understand whether the market is reacting rationally or emotionally. Right now, we're seeing an interesting dynamic. Retail traders are influenced by FOMO, while institutional traders are making moves quietly. This creates gaps in the market where sentiment-driven swings can be exaggerated, offering opportunities for those who understand the psychology behind them. And remember, crypto is global. News from one part of the world can trigger sentiment shifts elsewhere. Economic reports, regulatory announcements, exchange hacks, or technological breakthroughs, each event can tip the market from fear to greed or vice versa. Awareness and adaptability are your tools to navigate this ever-changing landscape. At this point, it's worth emphasizing. Subscribing to channels like CryptoScope gives you more than just market analysis. We provide context, explain sentiment, and break down trends so you can make informed decisions instead of emotional ones. If you haven't already, hit that subscribe button and turn on notifications. The market moves fast, and staying informed is key. Fear and greed also interact with news cycles. Good news can trigger irrational optimism, while bad news can spark disproportionate fear. Sometimes the market reacts not to the event itself, but to how people expect others to react. This reflexive behavior is why prices can swing wildly even on minor news. Understanding this reflexivity allows you to step in with strategy, rather than being swept away by emotion. Now, let's talk about your mindset. Crypto trading is not just numbers, it's psychology. If you let fear or greed control your actions, you're more likely to chase losses or miss opportunities. Instead, view the market as a reflection of collective emotion. Recognize that the peaks and valleys you see are often driven by sentiment, not fundamentals. This perspective allows you to stay calm, patient, and strategic. And here's a wall-breaking moment. I want you to really hear this. You are capable of mastering this psychology. You don't have to be a genius or have insider information. By observing patterns, understanding cycles, and recognizing fear and greed, you can make better decisions than most participants in the market. This isn't luck, it's awareness. Let's examine a current example. Suppose a coin is dropping rapidly. Headlines scream doom. Fear is everywhere. The average trader might sell. But if you look at market history, extreme fear often signals a bottom or at least a temporary overshoot. Conversely, if a coin is skyrocketing, greed is dominating. Many jump in without question, and a correction is usually inevitable. Knowing this doesn't mean you predict the exact bottom or top, but it gives you a statistical edge. It's also important to understand that sentiment shifts can be sudden. One tweet, one announcement, or one trend can reverse the market in minutes. That's why flexibility and readiness are crucial. You can't rely solely on fundamentals or charts. You must integrate emotional intelligence into trading strategy. Now here's the human element. Your decisions are yours. Don't let fear and greed dictate your actions blindly. Use them as signals, not commands. Learn to recognize when the market is acting irrationally and decide whether you want to align with it or take advantage of it. Discipline is your shield against the emotional roller coaster. And if you're enjoying this breakdown, remember, subscribing to CryptoScope keeps you ahead of the curve. We cover sentiment, market cycles, and strategies that aren't just about following hype. They're about thinking critically, strategically, and profitably. Hit that subscribe button now if you want to stay informed and empowered. Let's break down the final takeaway. Fear and greed are not your enemies, they're tools. By understanding them, you gain insight into the market's psychology. By observing rather than reacting, you gain control over your decisions. By integrating sentiment analysis with fundamentals, you gain an edge that most traders don't even consider. And let me be blunt, crypto is not a place for emotion-driven decisions. If you follow the crowd blindly, you're playing a dangerous game. If you recognize sentiment, understand cycles, and act strategically, you're playing a smart game. This is what separates consistent traders from those who chase hype and lose. Before we wrap up, I want you to remember one thing. The market reflects human emotion, and humans are predictable in their unpredictability. Extreme fear signals opportunity. Extreme greed signals caution. Your job is to observe, analyze, and act with discipline. So here's the final wall break. Take a deep breath. Step back from the charts when emotions run high. Evaluate your strategy, your risk, and your goals. Fear and greed will always exist in crypto, but you control how you respond. That's the real power you have as an investor. Thank you for joining me on CryptoScope today. If you haven't already, smash that subscribe button, like this video, and hit the notification bell. More importantly, take what you've learned today and apply it. Observe the market, understand sentiment, and remember, your decisions define your success, not the market itself. Until next time, keep your emotions in check, your strategy sharp, and your eyes on the patterns. This is CryptoScope, signing off.